Warm welcome all. Welcome to our special edition of Investonomics, our thought leadership platform, a show in which market experts, industry leaders, and business icons share their thoughts and experiences. Today, I have a special guest with me, Mr. Jakob Sorensen. He's the managing director of Gujarat Pipavav Port. Gujarat Pipavav Port is based in Gujarat, and it connects India with the Far East on one side and Middle East, Africa, Europe, and US on the other side. The port has a capacity of about 1.35 million tons. Bulk capacity is 4 to 5 million tons, and liquid capacity of about 2 million tons. The container is the main segment of the company where it derives 70% of the revenues. Welcome, Jacob, to this session.
Thank you, Pankaj. Thanks for having me.
So, Jacob, I think what is sort of highlighting or what is sort of getting more highlighted of late has been the Russia-Ukraine issue. What I want to ask is, from a disruption point of view, how does it sort of impact the Indian economy in general, and how do you see it impacting Gujarat Pipavav in particular?
Thank you. Yeah, but just let me start by saying that, of course, since 2020, we have been in this COVID mode, and it seems to continue, although hopefully we are seeing the tail end of the COVID and some of the restrictions will be lifted. But there seems to be no end to the disruptions, as you call them, because then we have shut down in China, then we have this now Russia attacking Ukraine. And on top of that, I think behind that, we have inflation, prices are going up, shortage of steel, etc. And there's a lot of disruption out there. What it means is, of course, that in Pipavav Port, we've been very good at keeping our colleagues safe. We have not lost a single employee in operational accidents or anything like that, and we have also kept our employees safe and taking care of our customers' business during the COVID situation. We've been running uninterrupted, except for the cyclone last year. We've been running uninterrupted, and also thanks to the fact that we are linked with the DFC by rail. So we haven't had the same COVID impact with the lack of drivers that you have seen in other ports. Taking up specifically on your question, I think the Ukraine war is no doubt giving further fuel to the inflation. So there's speculation in wheat, there's speculation in fertilizer and in other commodities that would come from Ukraine. I guess also oil and steel and other products from Russia will come into play. And then, of course, there's this massive amount of sanctions, which the EU and US is now putting on Russia because of this completely unacceptable attack on a sovereign nation. But what it will mean for us concrete in Pipavav Port is perhaps there's a silver lining. Perhaps this will give us some of the ships that are today deployed in the Black Sea and in the Baltic Sea, covering Russia and Ukraine. I think that some of these vessels, which are on a nice feeder size, they will be cascading and probably be busy in the Mediterranean, or they will come even further to the Middle East, and they could come to India as well. I'm quite hopeful that some of the products that we have started up on the waterfront includes feeder services between Pipavav and the Middle East, and this could actually be giving us further vessel capacity on those trades. So it's a mixed basket, Pankaj. There's good things and bad things. As you have alluded to, we have a container capacity of 1.3 million TEUs on an annual basis, and we are probably running 50% utilization at the moment. The main reason is that for the main ocean MLOs, the main shipping lines, they have still 12-15% of their ships caught up, especially in front of Los Angeles on the US West Coast. And that's simply equivalent to capacity taken out of the circulation. Ships can wait there 2-3 weeks to get offloaded. And in order to get back on their rotation, they are unfortunately skipping Pipavav on a regular basis. We have seen a little light in the tunnel there, and the volumes for containers are slowly but surely climbing upwards, and that's giving me a little bit of hope. And as I said, if we can on top of that get more capacity on the feeder services, then that could give us more container volumes in the coming months. So we see the numbers are crawling up. March is just about to be finalized now, and that's going to be our best months in the last few quarters. So volumes are looking good. Then we have another emerging issue. You have mentioned it, but we have China closing down again due to COVID. I think by now the shipping lines are more or less used to it, and I expect only small interruptions there. But what's a little bit nearer to us is that we have the monsoon coming, and we have still a little bit of bottleneck creating in Colombo. So I actually also think we will see some more cargo inbound for India being discharged in Pipavav, where other shipping lines are doing transshipment in Colombo. But Colombo is having some labor issues, and again, dwell time has been rising there. So that could again give the business to spill over to Pipavav. And we have this fantastic connectivity with the DFC, which enables us to evacuate without any delays. So the latest initiative we have taken is to, in fact, via the Indian Foreign Ministry, we have been discussing on open, and with Concor, we have been opening up the possibility of servicing Nepal via Pipavav from the west coast, which would give an alternative to the transshipments in Vizag, where we again have seen some congestion and volume building up. Then, of course, as in any multiple port business here, we are lucky that we have the bulk business. We have seen a strong pickup in LPG, and that continues. We are now in the final stage of upgrading our liquid jetty to be able to accommodate VLGC. That means very large gas carriers, and that will give a lot more flexibility to our customers in LPG. On top of that, we know that the NOC, the national oil companies, have blue stamped extension of the Kandla LPG gas pipeline to include a feeder pipeline from Pipavav as well. So over the next few years, we expect that the LPG will grow considerably, and our current customers are certainly also planning to expand their tank farm capacity in LPG. Coming back a little bit to the Russia war and attack on Ukraine, as I mentioned, fertilizer will be affected as well. Prices seems to be going higher. Pipavav has a very strong foothold on the import of fertilizer to India, and also now we see the volumes being very strong, and we have further fertilizer volumes in the pipeline. We have just commissioned a new warehouse for fertilizer, and again we have discussed with PRCL, our subsidiary, together with the Indian Railways for rail evacuation of the fertilizer, and that's going quite well. Maybe I should also mention on the LPG front, we have been very successfully running since last year. I think we're just coming up to 1 year anniversary now, being able to evacuate LPG by rail as well. So that's going very strong. And then finally, the dry bulk import of coal, import of limestone, and other commodities are also strong, and we are basically going full speed ahead with that capacity. And I think we are looking out for this year to exceed 4 million tons of dry bulk. So we are actually on paper exceeding our nominal capacity there. So Pankaj, that's really the overall picture. I think while the containers we would like to see going a little better, it is improving slowly, but we are running full speed ahead on all our activities. And on top of that, what we are trying to continue to do is to upgrade, as I mentioned, to VLGC. We are building more warehouse capacity, and we are also expanding the DFC connectivity. And we are now up and running with some of the trains that we are running are actually electric, and the electrification has been completed to Pipavav station. There's not a dull moment. We are pushing on we are firing on all the cylinders to keep expanding.
Absolutely, Jacob. So before I sort of come to individual business segments, what we have seen is that obviously last 2 years has been sort of a bit challenging, largely because of the COVID-induced pain. But last 5 years, revenue CAGR or growth or profit CAGR has been sort of pretty flattish. How do you see sort of things, or how do you see the trajectory going forward, given the fact that we are seeing a lot of optimism in individual business segments?
Yeah, I mean, I think we need to be continuously optimistic, and we have also to our shareholders continued to pay out the maximum dividend. And yeah, you can call it flat, but it's still a nice return of investments. I would think that the revenues will continue to grow, and we should see this business accelerate further. But unfortunately, 2022 has already given a few dark clouds. You mentioned again COVID continuing and the war and so on, and inflation, which I'd like to highlight. So the inflation puts a little damper because it means also that our costs are going up. But overall, we are still planning to position the port and accelerate growth and expand in all the business segments. And that ties into also to the upgraded port master plan that we are working on at the moment, which will be presented to GMB. And I think that is going to be quite essential for GMB to decide to extend our concession, which I know you want to discuss as well. I think we are teeing ourselves up to an extension with all the business plans expansions that we are having.
Jacob, how does the parent see this Indian entity, and what is the sort of a strategy of the parent for this India business?
Yeah, so Maersk has changed their overall global strategy, and what has happened in Maersk, it has gone away from being a conglomerate. Now Maersk is one big company which strive to be a global player in the end-to-end supply chain and container-based logistics. So in India, Maersk see Pipavav as one of the cornerstones for servicing the whole northwest market. And you will also see Maersk India accelerate their footprint on land and in logistics capabilities. That I'm quite sure. And of course, we in the GPPL, we continue to focus about the port, the waterfront, and the DFC link, and also, as I mentioned before, expansion in warehouse capabilities. That's very important for our sake. I think I can say also with PRCL, we look at becoming a container train operator. We have already running a couple of rolling stock, and we have taken on the lease of 2 more rakes. We'd like to get up to 10 rakes by the end of the year. So that means we are also expanding. And this is completely in line with how the parent company is looking GPPL as a good solid asset that will enable it to continue to grow in India.
Right. So, Jacob, I think the parent has also announced a capex of nearly 700 crores for the next 2 years. And like you told us, that port is operating at say 50% kind of a capacity. So where is it that this money is going to be put to use? Originally, that as we came out, we were saying that we would spend 700 crores on upgrading our crane capabilities and also expand the container yard. Now, with the volume not pushing to full capacity at the moment, what we're probably going to do is that investment still stand, but we're going to postpone it a little bit. There is also going to be some backlog in delivery of cranes and so on because of, as I mentioned, the steel prices and other things. So what will take priority is we're not going to say we won't spend that 700 crores. We're probably going to put more other projects on the table with a higher priority in the short term. One of the things I mentioned was that we are going to build out the capabilities in liquid, in LPG.
We're going to build more warehouses, and we are in the process as well of making a multimodal distripark just adjacent to the port. So, in fact, beyond the 700 crores, we got additional 2,000 crores of exciting projects that I'm working on, getting through the board and getting the internal approvals for. But that aggregated will come up to a new port master plan that we will develop together with GMB, and which again should lead into the concession extension.
Jacob,
So we have,
sorry, please continue.
No, I just want to say, so we have, in fact, quite a lot of capex lined up that we want to see starting in this coming financial year and going in the next 2-3 years. There will be additional capex coming.
Jacob, like you highlighted, so our sense is that we have a head start when it comes to DFC connectivity. And how do you see our competitiveness shaping up compared to, say, some of the other competitors like Adani Ports or JNPT? And how do we sort of, or when do we see our container volume sort of crossing a million mark going forward?
Yeah, I mean, those two things are linked. That's correct. But I'd like to just first of all, I want to highlight that we have gained 3 new ocean products in 2021. One of the big ones is also with COSCO, but it's only now that we see COSCO really picking up in volume. I mentioned also that we have the NMG feeder service that goes from Pipavav to Abu Dhabi, and there I think that we will see more capacity injection. So the volumes are slowly but surely growing. The DFC, we have been talking about that since we went live, and since we are already now the first port in India running with electric locomotives on some of our rakes. We do have a head start, I think specifically ahead of Hazira, which doesn't even have a rail linkage. And then also ahead of JNPT, which probably is years away from being fully connected with the DFC. But I don't think we compete about the same hinterlands in JNPT. We are no doubt servicing the northwestern frontiers all the way up to Ludhiana past Delhi. And as I said, we are even looking at also getting linkage up to Nepal. So that's the market that we will be able to serve from Pipavav and from Gujarati ports. And Mundra, of course, they are quite much larger than Pipavav, but that means also they have so many other things to focus on. And I frankly feel that we are not competing with Mundra. We are growing with, and we are growing above the market. And Mundra is going to do what they have to do. But the DFC itself is just starting to emerge. Last month I was in Delhi and I met with the management of the DFC company. And every month they inaugurate more sections of the DFC. They have double tracks that are going all the way to Ludhiana soon. And in fact, what another exciting information that I learned is that they are also planning a diagonally a DFC from JNPT to Calcutta and to the East Coast. So there's a lot more DFC going to come. And that is going to help India in also, I think, fueled by the higher prices of diesel, etc. You will see more cargo moving from road to rail, and the trucks will be more and more first mile and last mile. And you will see also an uptake on the DFCs. There will be more developments of warehousing and distribution facilities around the big metropolitans, and also where we see manufacturing taking place. And the DFC will be the linkage and the lubricant in making India more competitive and reducing the cost of logistics in India. So I think we're just starting to see this emerge. We have been very vocal in GPPL talking about these opportunities. I also pointed this out actually to the DFC management, that you guys need to be more vocal and you need to be out in the media talking about the benefits that you're providing. But I realized that DFC is more like an engineering company, and they are railways, but they're not really marketing. They're not really, in fact, they don't have the salespeople out in the streets. And then they are actually looking at installing solar panels on the slopes of all these, I think now they have 3,000 kilometers of rail tracks. And imagine, I mean, they're going to be a bigger energy provider of renewable energy than a rail company when they're full scale up and running. So I think DFC is just a very, very exciting thing that I'm happy we are part of.
Absolutely. So, Jacob, you have a subsidiary called Pipavav Rail Corporation. Largely, it earns only haulage charges from the freight trades. And I think going forward, how are we expecting traction on the double stack services to our ICD customers? And does it sort of help us in diversify our revenue pool as well by commencing container train operations as well?
Yeah, I think not only diversify, but certainly also there are synergies, right? Because the more services that we can do, you alluded to it before, Pankaj, that the DFC is a way for us to grow our container volumes, and that will happen over time. But also we want to become more active as a CTO, container train operator, and PRCL is a very good vehicle for that. Furthermore, we're looking at expanding with PRCL into some of the ICD opportunities. And for example, we are looking at the moment at Dolera, which is coming up south of Ahmedabad. But there are also some existing ICDs which we can help support again. So it's just a long haul. It's a really, really long-term strategy. And our commercial team is fully occupied out there talking with all the stakeholders about this. And what I really love about this is that I don't see any losers. I don't see that Pipavav will lose because Mundra start to get it. I see the cake is growing. I see that it's a transformation in the way India is doing its logistics. In a way, I'm very delighted about Gati Shakti, which the government launched last year, Gati Shakti. Where I see that the transformation also from truck and from road to rail is going to play a very important part of this. And it's just something that will take several years, but everybody will benefit. The truck drivers, the customers, the manufacturers, the consumers, the ports, the shipping lines, and we will see more efficiency as we see this massive capacity injection being taken into operations. Because if you calculate, well, the DFC with double stack, double track, double speed, double length, and then a lot more new railroad, I think I will say it's more than tenfold injection of the capacity, which is tremendous good news. And it just needs to be transformed into action. And that is where we are maybe the pioneers in GPPL at the moment, but I'm sure many others will jump on that wagon and get along with it as we get into the future.
Right. One more segment we were earlier into, Jacob, was a RoRo segment, but I think that segment got impacted after the sort of exit of Ford and GM. So how do we sort of see this business going forward? Do you see better days ahead for this?
Yes, I do. But first of all, I want to point out that in RoRo, we do logistics. And although, as you're rightfully saying, we've seen a downturn in the volumes because of the restructuring of the Indian automakers, I see a bright future here as well, because India will be one of the locations where you will see electrical vehicles being manufactured. And Tata is now talking about taking over the Ford factory as well. So I think that will come back. And we will be a part of not only shipping out the full build-up export, but it'll certainly also be, we will be a gateway for the components that will be imported for the EV manufacturing.
Right. And one last question from my side is that we have been a good dividend paying company for quite some time, but with the kind of capex being announced, though it might sort of get extended a bit, what kind of dividend payouts a shareholder can expect from Gujarat going forward?
Yeah, I would say that our capex are backed up by very solid business cases, and we want to be consistent. So, and of course, also you mentioned the parent company; they have an interest in seeing continuous dividends. So I don't think that although we will be aggressively investing, and we will also grow the revenues, then I don't think that we will want to deviate much from what we have done so far on the ROIC, on the return of invested capital, and on the dividends that we are paying out.
Another question I'm sort of tempted to ask is any sort of a development we see on the port concession extension post 2028 from with Gujarat Maritime Board?
Yeah, so all the things I've talked about so far is actually issues that we continue also to mention and emphasize to GMB. And we are having a good dialogue with GMB, who have put up a separate steering committee, which is looking at the concession extension in general. Because as you can see, there's a lot of reforms taking place in the major ports. The TAMB issue is being reformed and so on. And also in the minor ports, it's not only GPPL that comes up for renewal, but certainly also other ports in Gujarat. So GMB has put up a steering committee, which has taken on the advice of a third-party consultant. And I'm understanding that the report and recommendations from this consultant is going to be hitting the steering committee in April or May. And then we will see. The question is really not so much whether we will get the extension. I think the question will be, will we get it this year before the elections, or will it be happening only after the Gujarat elections, which you're familiar, that will be taking place in December. Right. But the rules are that there's a blackout period. So if we don't make it and get to the table and get something signed by August, I think we will have to defer any extension finalization for 2023. I had hoped that we could progress further at the Vibrant Gujarat, which was scheduled earlier this year, but as you know, also that was postponed or cancelled because of COVID. So we are not concerned about it, but as anything else, it's been disrupted by COVID and it's been delayed a little bit. It doesn't stop us from continuing to having these development plans and the capex plans that we've talked about. And I actually think it's helping us to convince that GMB feeling confident that GPPL is the right manager for the port.
Absolutely. So that's all I have, Jacob. Thank you so much for the insights into the company. I hope to sort of keep interacting with you in future as well. I wish you and the company very best for all future projects.
Thank you very much for having me, Pankaj. I think we covered everything that I wanted to say, but I would like just to say again that safety is one of the things that we take very high on our agenda, and we are operating without any fatalities in the last several years. Now we're getting into the monsoon again, and I think the worst thing that we have recovered from was actually the cyclone Taukte, which happened last year. But with the cyclone, I just want to say now to your listeners, we have basically rebuilt the port stronger. We have reconstructed the warehouses and the roofing and everything that was destroyed during the cyclone, and we have done that in a stronger and higher and stronger dimensions, so that we can withstand also future effects of the climate change. And then on top of our new fertilizing facility, we have actually plans to commission a 1 gigawatt solar plant, which will start here in April. And that is going to enable us to mitigate some of the inflation that we are no doubt going to see in India. So actually, I think on all the fronts we are doing well, but we are not lacking any challenges, but we are not giving up. And in fact, as I say with a smile here, I think it's just unbelievable to be part of, and we have a lot of good plans for the future.
Thank you so much, Jacob, for all this. Wish you all the best. Thank you so much.
Likewise. Thank you, ICICI.
Investments in securities market are subject to market risks. Read all related documents carefully before investing.
Subscribe to our YouTube channel and click on the bell icon to never miss an update from ICICI Direct.